All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about 90 minutes, and interesting open. We had a gap down, and it's one that I made the comment this morning that it's pretty insignificant in terms of the magnitude of the gap, and really even the reasons for the gap. To say, well, oh, gap down, this is gonna be trouble or anything of that nature. There weren't any teeth behind it, and still aren't. We have some retail weakness and retail catalyst, but we'll dissect that a little bit more. Let's just start with the challenge. Basically, in the challenge, I have half in cash, half in some GLD calls. This morning, you can see the U.S. dollar bouncing and pushing on about 0.4% higher. And so naturally, gold is going to go the other way, and we see gold about 0.3% lower. Right? I've gotten a few comments since making this gold trade of oh, well, do you believe the market's going to crash because you're buying gold, or you buying protection, or you buying it for the... No, my GLD position is purely technical, and the only relationship here is gold versus the U.S. dollar. Right? Gold is a currency. It's that simple. The days of let's buy gold because everything's going to crash and let's buy gold for protection. Well, you know what? We saw a little bit of that come in December, but also we also didn't see the U.S. dollar rise in December. So, the longer-term correlations are very currency-related and have nothing to do with market up or market down. We saw the S&P up yesterday and gold was up. We see the S&P down slightly this morning and gold is down. It's just one where it's a currency. That's it. And it's a currency where if the euro continues to go higher, right, then gold will continue to go higher. Well, look at gold versus the euro today, right? A little pullback in the euro, a little pullback in gold. Almost the same magnitude. And the reason I went after gold instead of getting long the euro or short the U.S. dollar was simply because of the fact that the options on the euro and on the U.S. dollar were terrible. The spreads were awful. So I went with gold. And that's all the trade, that's all the position is. Now, it does look like gold has, a ways to go, here if it's able to break out of this, consolidation. But I bought gold within this consolidation. I was able to pick it up near the lower end of this consolidation, but bought it here. I don't see anything that says, ooh, breakout on, go. I decided to hold it yesterday into the close because we did see a little breakout in the euro. And so I decided, okay, I'll hold it. I'll get a little greedy. I'll hold it. And, ultimately that could backfire. But, the reality is anywhere in this area doesn't have a whole lot of technical significance, right? Now, with my short-term option, I do have to be a little bit careful. With that because of the decay. In fact, it is one where 50 cents up and 50 cents down are not the same thing on the option, right? It's not like, oh, well, if the stock goes up 50 cents, we'll make X dollars, and if it goes down 50 cents, we'll make minus X dollars. No, you'll lose more on the way down than you'll make on the way up with how it is structured, and basically with how all options are structured in this market, right now. So, kind of a little bummed to see it, down a little bit here this morning, but, at the same time, I don't see any real significance there to it, so going to continue to hold that. Now, I am looking for another position, and, this morning I mentioned I'll be kind of looking at some of the put side on some things, and, do we get any put triggers with something like a Bank of America or something like that? And the answer was absolutely no. It's just absolutely no. Yes, okay, the market's short-term overbought and everything else, and yep, we had the gap down below the 7-hour moving averages. But in terms of any sort of real sell pressure that came in at the open, there was none. Now, ultimately, that could change, but at least in the open here so far, there's just been very, very little. And one of the things we saw at the open of the market this morning was IWM gap down. and really didn't trade lower, right? And in fact, if I put up a 1-minute chart of the IWM here, you can see IWM opened up, and yep, it fell right away and then hit this low in the first 30 minutes, right? And you oftentimes hear me say, first 30 minutes, a lot of times it just isn't significant, right? So I want to see how it's going to play. We see the chop on back, and then we start filling the gap, and it's completely filled the gap here, has the IWM. Well, also this morning we saw the IWM outperforming the SPY. And when we see mornings like that where small caps are outperforming large caps, that's generally not the dynamic you see on a day where the market's ready to sell, sell, sell. So, okay, puts, all right, I'll be a little more cautious with them. Yeah, there's some individual stories and everything. And I looked for a few call setups. Yeah, it just felt chasey or day tradey, here with it. So I haven't jumped into to anything here just yet. The negatives out there this morning are retail or consumer related. Here's Macy's down 18%, and just getting blasted here this morning. We see Target was down, here in the pre-market, fell a little bit more, but snapping back just a little bit. In the terms of Target, this isn't exactly a huge move, but if we just come into the XRT, into the retail ETF, you can see the big gap down in retail here today. Now, there was a small bright spot in Bed Bath & Beyond on their earnings, and this looked very much to me like a short squeeze, and something where the shorts look at the earnings and go, you know what, we've gotten everything we've wanted for a while, and the story's starting to change. Let's get out of here. It's 25% shorted. And the tendency for Bed Bath & Beyond has been to gap down big on earnings, but 25% shorted. And you can see the volume so far. It will eclipse the volume for the last several days if it stays on this pace. And that is a sign the shorts are getting squeezed. And, that probably lasts here for a little while, which means Bed Bath & Beyond on dips, very, very buyable here overall. Am I a fan of their fundamentals? Do I think it's a great turnaround story? No, I don't. I'm not, and I don't. This is a stock that's trading at a 4 PE ratio, and for a reason, right? They continue to see, some serious troubles, and have been as kind of the rotation of things has changed. But you can see their revenue. Right, their revenue. It's been something where the stock has been tumbling over the last several years, but their revenue hasn't been tumbling. Hasn't been actually growing, but their revenue has hasn't taken that big ding, that big hit, in terms of just the basic sales there overall. So a little bit brighter of a spot here this morning where it sits and with what it's doing than some of the other retail that is out there. Now in that group, in that sector, is Under Armour, and me, I'm very bullish on Under Armour, and I almost bought it this morning. The spreads were pretty high, but Under Armour was upgraded this morning. And interesting. Yeah, you say, well, why is the stock gap down when the company's upgraded? We see that from time to time, and with the market conditions and some of the retail numbers that we're seeing from all these other companies, Macy's, Target, and whatnot, created a little bit of a downdraft with a lot of these, but they are getting bought up here. For me, it's just still not a fantastic risk reward scenario right here. And so I'll be a little more patient here with it, but hopefully we get a chance to get back into Under Armour very soon here. Okay, we have there's a stock out there that I follow, and this morning it's it's in the news, and it's sorry, I mistyped that, MDB here, Mongo. and this is a database, company here. And one of these that I think you can kind of equate to Twilio, in terms of just in terms of a company that is, smaller, that is up and coming, that has a lot of positives, a fairly low market cap, still trying to turn revenue into earnings, right? Mongo, I believe they had something like 250 million in sales, but lost money last year. Okay, so we're not talking about a positive earnings story or anything like that, but we are talking about something when it does turn those earnings, does turn that revenue into positive earnings. We're talking about a stock that could easily be trading in the 160 to 180 area. This morning, news came out that, basically their relationship or with Amazon and a product that Amazon is coming out with is only compatible to a 2-year-old version of Mongo, so there's a little bit of consternation about that, and so we see the stock sell off. Ultimately, I think this will be a buy opportunity. If you've never traded Mongo or don't have it on your watch list, check it out. Check it out. It's something that I do think, has some significant upside as we go forward throughout this year. And for me, I kind of equate it to Twilio, even though yes, they do different stuff. They're different type of companies, and if you're looking at Mongo, take a look at Twilio here as well. So some positives, kind of building in this group that, yes, they are going to be market weighted, but not to the same degree as, many other things are out there in the market right now. If we just take a look at the sectoral breakdown today, you can see what's leading. It's utilities, right? But then we have industrials. Which, generally if it's a bearish type of day, you're going to have utilities and consumer staples and real estate on top. And industrials are going to be down here near the bottom, right? We have consumer discretionary near the bottom, which is, the right spot for it if you're bearish, you're looking for a bearish set. But this is really a mixed sectoral breakdown here today with, consumer discretionary getting hit with, the news elements there. But it's not one I can look at and say, wow, okay, the Bulls have a big advantage here or the Bears have a big advantage. It's a very mixed bag, here on the open, and one that, I don't think has any real implication or real read into it about what's going to happen, going forward. The reality is the short-term market is overbought, right? The short-term market is quite overbought. But, right, back here, it was oversold. Oversold didn't mean it had to bounce, right? Just, you got to be able to wary of it. And, right now, the short term's overbought, but overbought doesn't mean it has to sell. But I do think you have to be a little bit wary of it. It is something where, I thought, looking at yesterday, if we break yesterday's lows, maybe we see some selling pressure come in. We saw a few things break yesterday's lows. We saw the SPY break yesterday's lows just briefly, but we didn't really see any real sell orders, kind of flush in. So, not a lot of significance there, to that at least so far. If the market does decide to sell off into the close, and let's just say ends down 12, 13 points, we will have a very toppy pattern in play here in the short-term market and what's called a tri-star. And a tri-star is basically a doji candle followed by another doji candle followed by another doji candle, and you see a rally into it, and generally afterwards you see a decline after it. Now, these candles never look like perfect dojis, right? They always, one has a longer leg down and one has a longer leg up, and one maybe a little bit further one way or the other, so you get a little bit of mixture in it. Right now, and what we're seeing is probably as picture perfect as they come, if the market sells off 10 to 12 points into the close. But, be wary of this pattern setting up. I don't think it's something where you look at and go, oh, well, hey, I'm just going to go short the market based on this. Could provide some interesting risk. It does provide some interesting risk-reward elements, that do come into play with it. But something to be wary of. The other thing I want to point your attention to is the earnings calendar here, and the fact that we are coming into earnings season. And this is going to be a very important earnings season. To me, one of the more important ones. Next week we'll have a few, here and there come in. On Tuesday, we'll really start to kind of get into the meat. J.P. Morgan, Wells Fargo, United Health Corp, UAL, who's already pre-announced. But then here on Wednesday, Bank of America, Goldman Sachs, CSX, Alcoa. We're really going to start getting into it. Now, this earnings season is going to be, and they changed their calendar here, but is going to be quite elongated. Most of the time, earnings season, you see most of the earnings come in over a 3-week period, and that's the big bulk of it. This time, we'll have kind of warm up next week, with some of the banks and, CSX and Alcoa. But then it's about a 1, 2, 3, 4, 5, 6 week period of heavy earnings, and then another 4 weeks of them just trickling in. And most of the time, these are the retailers and stuff like that. So it's going to be a very prolonged earnings season, very drawn out, very normal for this time of year. And it's going to be one where companies are giving their 2019 annual projections. And the market's going to be paying close attention to it. And I think this could be one of the most important earnings seasons going forward. And I don't mean that by, oh, well, if the market goes up during earnings season, then the market's just going to keep going up, or vice versa, right? And I don't even know that the market direction matters. But if we see companies, if we see companies lowering earnings guidance left and right, it could get ugly fast. And if we don't see that, that could alleviate some fears very, very quickly. And, so far going into this, it's kind of a mixed bag. We've seen, Nike, we've seen FedEx, we've seen Micron, we've seen, now Bed Bath & Beyond. We've seen some ugly pre-announcements. So it's going to be a very interesting one, and it's one where, each day, I will be going through here with you and talking about some of the earnings that I find to be most important and what some of their implications are. For me, early on, J.P. Morgan, CSX, they're the two most important that come in next week. Obviously Bank of America, some of the other banks, but they always tend to look the same, so pick one and go. But, J.P. Morgan, CSX, and then we'll start getting into some of the industrials, the Caterpillars, the Honeywells, and I think those are going to be, pretty big and, bigger than, some of the tech names, even though we'll probably get more reaction out of the tech, out of the tech sector and everything else. But I think overall those are going to be some big, some big earnings reports in terms of their implication for things going on forward here. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.